Hi, welcome to the Market Alert for Monday, the 7th of October 2019. Headline for Bitcoin really is it's the best performing asset of the year, even after the recent price downturn. So there we go. Along with gold, of course, as well. The stock market struggling, which we'll look at a bit later in the Market Alerts. But first off, let's have a look at Bitcoin. At the moment, in a bit of a consolidation phase, hopefully to continue being the best performing asset of the year, to move back to the upside. But at the moment, the market is below the 200 bar moving average, which means that there is downside pressure. And we can also see that prices have closed below the 76% retracement over the weekend as well. What we're looking for here is some support of these lows that we see here, in particular this one at 7688. If not, you better watch out for these two here before prices find any sort of support. So the downside with short-term bounces is what we're seeing at the moment. And if we look at the 4-hour chart, you can also see the defined downtrend there of this market at the moment, and also the 76% retracement drawn across, sorry, the not 76% retracement, the lows drawn across. So we have this one here, which will be the same as the one that we've just seen, except we're looking inside of the daily bars. So that's where you need to see some sort of support. We've got a bit at the moment, but it's still looking weak. Keep it simple. The market's making lower highs even in the 4-hour, so there is weakness around in this market at the moment. Also, 15-minute chart yesterday, we can see that prices Sunday, they don't really do a lot, and then they traded sideways. They had a bit of a bounce to the upside to the 200 bar moving average, and then a retracement, and then prices move lower, which is what created the low towards the 7736, the low that we see over here, and then this one obviously if this is taken out. So overnight the market's putting in a bit of a bounce and pulling back. So what I would be keen to see here is the market putting in some sort of support at this level, which it has come down to at the moment, which is the 7798 level there. So let's see what happens, but certainly short across the board at the moment. You will get the odd day where the market bounces to the upside, but at the moment, certainly in the 15-minute, the 4-hour, which you can't see here, let me just get this for you. You'll see the 200s there, so short in the medium term, and then in the longer term as well, we're also short. But that doesn't mean to say that we don't get bounces back to these levels. So just be flexible in what you see. What it's saying is that any move to the upside would be more short-lived at this stage than the downside. Meanwhile, in the stock market, Friday's news roller coaster week ends with buying panic as world sinks into recession. Anybody that's been following the alerts since May knows that we've been forecasting a recession coming, and there is certainly a massive slowdown in global growth according to all of the economic data, which is not being reported by the mainstream news, and no surprise there. So let's have a look at the Dow on Friday, and we see they ramp the market back. I mean, as soon as you get down to these sorts of levels in the daily chart, in particular the 200 bar MA, as we've spoken of before, they like to bring this market back. They'll do the damnedest to bring it back. The key here now is this. Let me just have a clean up of this chart and show you what I'll be looking for. The market currently back at the 50 bar moving average, and what we're looking at now is to see how much strength this market's got. So what I would be inclined to do is to go from this high to this low and watch this level. It's going to be a key level. And then what I will do if the market trades up to this level is I will just keep redrawing the 76% retracement off the highs going back on the left of the chart. That said, overnight prices have gapped lower on another tweet or news coming out about a trade deal not happening with Trump and China. And of course that has led to the market gapping lower, which you can see here, managing to get above the DP level, the daily pivot, and prices above tend to be bullish as long as they can stay there. Also above the 200 MA there at the moment, and attempting to move to the upside. So it's important this market fills this gap as well, which it's come back to here, but it hasn't filled it yet. So I wouldn't be at all surprised to see prices, if they can hold, move to the upside. But this market is really, really tired. It's over, where are we, 2008, 2009, March of 2009, they started pumping money into the market. And that's what they've done ever since to keep it going. The repos continue to grow as well. Found this chart now showing how much money is being printed and sent into the banking system to keep it going overnight as well. So when you start to combine all of these things, you can see that the market is starting to show signs of fatigue, and in this case needing some sort of other further financial methadone to keep it going. I'm amazed it's lasted this long, but let's put it this way, I wouldn't want to be buying at this level, and certainly not in October, because October traditionally is a time when markets suffer their most volatility and had their biggest crashes as well. So let's see what this week brings as far as this market's concerned. But this is not good, where the market's gapping and trying to move higher all the time and hoping for good news in order to do it, or turning bad news of the China-US deal and then trying to bring it back, gapping it lower and bringing it back. Any other time the market would have just been in a bear market, but like I say, it's being supported by the Fed. So on Friday, we can see that the non-farm payroll figures were out. And these figures, you can see the non-farm payroll here, coming out less than forecast, and certainly less than the previous month. So the question is, why did the market go up? And the reason the market went up is very, very simple, because this supports the case that the Fed should reduce interest rates and keep pumping the money into the markets for the Wall Street boys. And there you see the net effect. The market just went up and kept going all the way up once we broke the 200 bar moving average. And news today, I'll tell you what, let's have a look at this week's news. There's a lot of news this week. First thing off, Powell's on tour. So he's going to be saying whatever he needs to say this week. He's going to be, I think the time's wrong on this, isn't it? No, that's right. So yeah, 6 p.m. Powell on tour. I think he's in Denver. Then he's off to Kansas tomorrow, and he's also speaking on Wednesday. Fed minutes as well on Wednesday. And then we've got Barmy Carney. He's out on Thursday, along with Super Mario as well. He's speaking on Thursday. So we got quite a lot of central bank noises this week. So we'll keep an eye on these times, and let's see what they've got to say. They're going to do everything they can. They're destroying the financial system, that's a certain fact. But let's see what it is they have to say in order to keep the illusion alive that the banking sector is fine, even though they're printing billions overnight in the repo market in order to support the bank's liquidity. The pound waiting for the Brexit nonsense. You can see there it's building up to a bit of a triangular shape, pennant shape, so it can either break to the downside or the upside. No idea what to expect from this at the moment. We can see it gapping down overnight, but that is in combination with, say, the US-China trade deal, whatever it is that they can't seem to put together. Market back below the 200 bar moving average and the 50 and the 200 at the moment, and the DP level, so a bit of downside pressure in this market as there was on Friday. So it's all down to whether Boris has got a deal or no deal or whatever at this time. But don't need to be too concerned about the finer points. We just need to look at what's going on in the chart, thank goodness, and not to get bogged down with the detail. And let's have a look at a few other things before finishing off here. Just going back to Draghi, Daniela Di Martino Booth, brilliant analyst. She used to work for the Philadelphia, or I think it was the New York Fed. And this sums it up really. What I've always said for the last 10 years as well. Can anyone please raise your hand and tell me why Draghi is whipping out QE to raise inflation expectations when this legacy of his first failed attempt? We'll look back one day and ask, what the hell were we thinking? Greed is corrosive brain agent, and it's about taking care of the 1%, and that's all it is about, and keeping the illusion alive, as I keep saying. But they're going to be printing 20 billion a month from November, and the convicted criminal that is Christine Lagarde will be taking over at the printing presses from that date. It'll be interesting to see what she does. Implied volatility obviously dropping on Friday as well because of the massive move to the upside of, again, making sure the markets don't fall apart just yet. And there you can see how it's pulled back on Friday. And the reason it remains red is because we're below the 20 bar moving average in the prices and above in the implied there. 10 years remain inverted. Recession is on the way. Deutsche Bank also interesting here, as this is move lower. We're below the 200 bar MA. We're just back above the 200 on Friday. Watch this level for Deutsche Bank, and this is where what's really fascinating is the more negative they go with rates in Europe, the more pressure they put under the banks, the less profit they make, the more difficult it makes it, the more they need to borrow to stay in business, and it's just a downward spiral. But these central bankers can't see it. It's a case of passing the buck on, frankly. I don't want this to fall apart on my watch syndrome. That's what it is. Anyway, let's see how things pan out today. Don't forget Powell speaking at 6 p.m. around that time, and see if he's going to hint at any further rate cuts, as that will support the Dow and all other stock markets. Okay, that will do it for this one. Gone on long enough. I will let you know if anything happens. Otherwise, as ever, thanks for watching. See you in the next one.